But analysts are skeptical, saying that even though China promises this, the market may not be able to support purchases at that level. Joining us now for more, we have Scott Bauer. He's the CEO of Prosper Trading Academy. And Scott, when you break all this down, the $50 billion worth of goods, what do you think? Is that possible?
Well, it's certainly possible, but it's a matter of over what time frame. And pretty soon, what do you put around pretty soon? China bought just under 9 trillion last year. $9 billion last year. So looking for that 50 number from the U.S., I don't know what time frame they could possibly do that in without completely oversaturating the marketplace. Now, the fact that we do have these talks and maybe there is a phase one, it's not signed yet, maybe there is a phase one deal, that's great. The market is reacting positively to that. However, there are still so many questions here. And, the biggest one to me is the question of, can China even fulfill this and over what time frame? So I think that the rallies that we're seeing in soy, in corn, and even quite frankly in oil, all should be sold.
Scott, Goldman Sachs out today raising its 12-month commodity returns forecast to 6.4%. That's a 3% increase. This is all based on what seems to be the subsiding geopolitical tensions. When you take a look at this, do you expect almost a rebound in the commodity forecast going into 2020?
On this entire news here, I think it's really a buy the rumor, sell the news. And we're getting this little bit of euphoria. I'm looking at this as a trade. I'm not necessarily looking at it as a investment for all of 2020. I think over the next 3 months here, as we get a little bit more indecisiveness of this phase one deal and then what may happen afterwards, I think this is all a fade, meaning sell these commodities. However, if we can, get through the season, get through the year, get through the first half of the year and closer to the elections, and where I do think that not only phase one, but maybe the next 2 or 3 phases of a deal could come together, that's where I think we see a big boost up across the commodity space. In the near future, though, I'm a seller.
Well, Scott, let's talk a little bit about crude specifically. Today, we have oil closing just above $60 a barrel. Do you think crude will be able to withhold that $60 threshold?
I really don't. And we've had some positive news, especially overnight, come out of China with some economic numbers there, so better than expected. However, you still have to look at the fundamentals here and the oversupply. Just look at last week's EIA and API numbers and the humongous build, the humongous glut that we have. Shale production is not slowing down at all. So I think when you look at the fundamental base of the oil space here, we do have an oversaturation. We don't have that global demand yet really ramping up. So I think that, again, this $60-ish range, which is the absolute top end of the range that oil is traded in over the last 6 to 9 months, I think it has to be faded.
And also discuss, so then it seems like you think that oil, the story here, it's more of a supply problem rather than the demand story.
No question about it. Shale production at record... Yeah, shale production at record levels. I know OPEC is extending their cutbacks, whether it's to June or for the entire year, but it certainly seems like the supply is just plentiful, far, far exceeding any sort of global demand. Now, let's see, in the next couple months or so, if we do progress nicely with the tariff trade talk, and if we do continue to get decent numbers out of China, but more importantly, if we start to see Europe start to pick up a little bit, that may change my stance. But right now, it's all about oversupply and just the demand not being there.
All right, Scott Bauer, we'll leave it there. Thank you.